traders. Excuse me. This is Blake Morrow. You were listening to the Morning Edge webinar. We need to get to it. We need to get started. We need to get ready for today. So, of course, we'll start with the euro dollar as we normally do, and let's take a look at it. So yesterday, let's just discuss yesterday's price action and tell you what went right and what went wrong with our yesterday's analysis. So yesterday, we were looking at this, and yesterday we were right here. Yesterday morning, we were right here, and I told you, hey, we did a little false breakout above the 110.50 level. What I would expect is a move below or to test 109.30, possibly break below it, and then bounce right back. And I thought we would do this. Remember yesterday we were here, and I said I thought we would do this, and then back like this. Okay, so basically what we've done is we broke down, we came back up, we hit 109.50. I thought we'd trade back up towards 110 and find a neutral zone around 110. But what's interesting is we haven't, and we're back down at 109.20. Now, like I mentioned to you guys earlier, one of the things that I've got the biggest issue with right now. One of the things that I've got the biggest issue with right now is the huge positioning in dollars. It's an extremely crowded trade. Okay, that's my biggest issue. Now, one of the big issues that I have about shorting the dollar today, because the positioning is so big, is that I think everybody's expecting the same thing. Everybody's expecting a dollar pullback, like everybody. Like that's like the consensus trade right now amongst traders. The consensus trade amongst institutions and directionality and where they think the dollar is going to go is higher, but the consensus trade of what's going to happen today following the FOMC is a weaker dollar, and so that in itself scares the crap out of me, and that's why I'm not really too comfortable right now looking at the dollar and thinking, well, this is the time to sell it, time to get long the euro at this point. So again, I'm skeptical. But I do want to find a place that, in my opinion, is a place that would give us an opportunity to be on the short side of the euro dollar. And frankly, I think that's going to be up towards 111 if we can get up there. Now, what we can do from where we're currently at is do this, right? Now, I don't know, you may not have been looking at the euro this way, but I think this is the way we have to view the euro. Now, what does that mean? Does that mean right now is a good time to get long the euro dollar? I mean, hell, if you really wanted to put on a trade ahead of the FOMC, you can always go long the euro and put your stops below 109. You want to take on a little bit of risk ahead of the FOMC. You could do that if it's your cup of tea. It's not something that I would feel very comfortable in doing, but I think that's possible. All right. Now, if we get a rally towards 111, why would I be more comfortable shorting it up there? Well, first of all, if you go to the daily chart, the downsloping trend line that you see in the euro dollar, the major downsloping trend line, comes in above where we're currently at. It comes in closer to like 111.50, maybe 112, okay, depending on how quickly we can get up there. All right, but the downsloping trend line that you see here, and I can make a slight adjustment if you want, okay, we could end up being like this. We could be a little higher, but I know that as long as we stay below that yellow trend line, I'm a seller on rallies. Now, if we get above that, we get above 112, there's not a lot that's going to stop the euro dollar from squeezing. And I think most institutional traders, if we get above 112, and you can say lights out. Lights out for the dollar. The dollar is really going to start to see a double bottom in the euro. double top in the dollar, we're going to see a significant pullback over time. All right. I think that's true. So what I'm trying to say to you is anything up towards like 111, 111.20, 111.50, I'm a seller. Okay. We get above 112, it's game on. Game on to be, bearish the dollar, in my opinion. All right. So let's take this high, the spike high following the ECB, then the retracement low. By the way, this was a 38% retracement, if you guys don't recall. This move right here, high to, or low to high, that was a 38% retracement. Shallow, right? Should produce a continuation, which it has. It's been a very sloppy continuation, but it has. All right. If we spike up to 111, that'll be 161% extension. Now, a lot of you are probably like, man, can we get all the way up there? This is an FOMC day, an extremely historic FOMC day. This is a day that we could see a 200 pip range quicker than you can say lickety split, or holy crap, or holy shit. This is a day that this market can move 200 pips so fast it'll make your head spin. All right, so don't think that we can't reach 111. It's possible. I'm not going to say it's probable, it's possible. But I will tell you, if we get up towards 111 or 111 and change, I will be looking for shorts. Doesn't mean I'm just going to stick my neck out and start shorting it, but that will get me interested. All right. Now the flip side is, what if we break down? How about if my assessment is correct and the consensus trade is to short dollars, but man, the dollar just comes out of its shoes. The Fed starts raising, Fed raises rates and people go, well, they're raising rates, dollar's going to rally. Fed's raising rates, ECB's lowering, is doing quantitative easing. Bank of England doesn't know what they're doing. The RBA is on hold. RBNZ could lower rates again. Swiss National Bank's going to go further in negative territory. The BOJ may, cut again, as far as we know, may do more quantitative easing. The Bank of Canada could be going into negative rates. Well, screw that. I'm buying the dollar. That could happen. Right? And if that happens, this support is going to be very, very critical. All right? This support right here, sorry, I don't know why I was on this is the actual spot. It's 111 still. But this support is going to be very critical for bulls. I think if we break this support, you're going to see a lot of crying of people that are calling the dollar, dollar bottom, or the dollar top. They're going to be extremely worried. So if we trade down to 108 and break through 108, that's problematic. Now that's a 300 pip range, guys. And a 300 pip range, it's not, you don't take it lightly. We're a 300 pip range. I have a feeling by the time we make a decision on interest rates, we will be probably right about here, 109.50, 109.60. Why? Because if you've been with me at any length of time, you know that before a major news event, the market tends to go mid-range. Right? Markets tend to go mid-range. 109.50 would put us right in between 111 and 108. And that would be very neutral, in my opinion. So I wouldn't be surprised if we just kind of grinded higher up towards 109.50, between now and 3 hours from now, and then we get ready for the Fed the rate announcement at 2. Again, I'm neither bullish or bearish the dollar. However, I'm a dollar bull. If the euro dollar rallies up towards 111. I would think about taking some dollar longs because I think that's the best risk reward. Okay, because if you talk about risk reward and you look at this downtrend line, right? If the euro rallies to 111 from here to 111, It's a good short, and you maybe only have to risk 100 pips. 100 pips to maybe make 200 or 300 pips, maybe 4, maybe 5. There's not a lot of good risk management down here. We're, in between 108 and 111. They're just the risk management really sucks, whether you're going long or short. So I think the best risk management trade is being short the euro dollar on an approach to 111. But you can't just short it at 111. I mean, if we get to 111 today, I just can't just short it. I mean, I could maybe take a small position, but you got to watch price action at that point. You got to be, watching things. Now, I said it a little bit earlier. There's a lot of new listeners that are coming in right now. So let me ask you this question again. What will I be looking at in particular? What will I be looking at in particular to confirm my dollar bias? Anybody? Gold. Correct. So, gold. Gold's it, guys. The gold is the ultimate inverse relationship to the dollar. If gold is selling off, the dollar is going to rally. Plain and simple. Or there's a really strong, 85% probability that's going to happen. Flip side is if the dollar is rallying, gold selling. I think I just said that. If the dollar is selling off, gold will be rallying. I need that confirmation. If we spike up to 111 and gold's not doing anything, I'll be more than happy to start shorting the euro dollar. Because what should be happening is if the euro is rallying, gold should be marching right up with it. Okay, so let's take a real quick look at gold. I think that it should be important to note, just to take a real quick good look at it. So the problem with gold is look at how weak it's been. If there's anything right now that's telling you, if there's anything out there right now that's telling you that you have to be really careful about shorting the dollar, it's gold right now. Because gold is weak. Gold hasn't confirmed this dollar reversal that we've seen, right? Oh, it's the big, massive dollar reversal. The dollar has put in a major top. Gold hasn't told us that. Okay? Barry said last Friday, September 125, gold calls were bought 92,000 times. Yeah, remember the options trader trading during the ECB meeting, Barry? Was so wrong-sided. That person's probably guy got worked. Yeah, that guy probably committed suicide, Barry. So just because a big bet's being placed in the market, don't bet the farm, if you will, based on that. Yeah, I mean, people are buying calls. I bet you there's a lot of people that bought calls right here too. And I bet you there's a lot of people that bought calls right here too. I bet you there was a lot of people that bought calls right here too. Probably a lot of people that bought calls right here. Probably a lot of people bought mega calls right there. Right? So, look, that trend is down. It's down. Could it reverse today? If anything's going to reverse it today, if anything's going to reverse gold today, it's today. But do you see it? I mean, do you see it? Can you argue that? Wait. The Fed's raising rates. Okay, the Fed's raising rates. The Fed's tightening monetary policy, which really should, not help inflationary. It shouldn't put more inflationary pressures in the market. It actually should put more. It's going to weigh on inflation outlooks moving forward globally, which in turn probably will keep gold weak. I can't argue it. Somebody's just making a real bold call. But I will tell you this. if gold spikes up today and it confirms, so if gold gives us a big green bar today, gold gives us a big green bar. Hold on, I'm trying to grab a green pen. Just give me a second. If gold gives us a big green bar today that looks like that, then by all means, that's going to tell you it's time to short the euro, or it's time to short the dollar belong the euro. Damn it, I'm in. You know what I mean? But look, just if this happens today, I can pretty much tell you there's going to be days like this following, right? If this happens today, right here, if that happens today, we're probably going to get this the next few days, right? That would tell you that the euro is going to rally. However, what seems more likely, and based on what we're looking at right now, what seems more likely is we're going to get a big red candle that looks like this. And if we get a big red candle like this, we're probably going to get another red candle like that, and another red candle like that, and another red candle like that, that being today, and that's going to tell us that the euro is going down. Okay? So, you know, again, my confirmation is more gold than it is looking at the euro, so to speak. Okay, let's go. He said, I think the difference between the ECB guy and gold is sentiment and consensus was extremely one-sided in the euro going into the ECB. And who knows, maybe that guy gets bailed out today. His timing was very poor, though, thus far. Yeah, who knows? I mean, look, I think sentiment is extremely one-sided still. And, you know, but like I said, I think the consensus trade is short the dollar following the Fed, and I don't necessarily agree with that. All right. I need to get into the charts because I'm now way behind. All right, let's go over to the cable. Sorry, guys. I'm just trying to help you formulate a plan, and I'm trying to formulate a plan, obviously, for myself, too. All right, so here's the pound. We are extremely weak. We had some weak employment data that came out of the UK. So we finished the head and shoulder pattern. It's done. It's complete. If you guys don't know that, remember it was 150, right? We talked about this yesterday. Head and shoulder pattern, completion, done. Crap, there it is, done. Finito, all right. Head and shoulder pattern completed. We are still in a descending wedge, which ultimately is bullish, but that doesn't mean that we can't continue to build this apex. So what do I mean by that is the apex, you know, can still be built. We can still drop to new lows, bounce back up, yada yada yada. Let's take a look at the hourlies really quick. Low, high. Oh, hold on really quick. Okay, so the 786 retracement comes in right here. I don't even want to mark that up on a day like today. I mean, because here we are, right? You know, with the pound. I mean, we're sitting right here. I think any rally to 152 is going to be resistance, and any sell-off down at 149 is going to be support. I mean, we have to be really wide on our analysis today. It's not like oh, we're expecting, you know, new home sales. Actually, we do have housing data coming out today, but this is the FOMC, guys. So this is going to be market moving stuff. So obviously 149 is going to be pretty key support on the way down. 1.49. Resistance 1.52. Sorry, guys. You know, like I said, got to be wide on our analysis right now. Very, very wide. Let's go over to the Swissy. Swissy's easy. 98 cents is support, right? It's huge support. It's a 618. Low to high, 618. Remember, this, and if we dip back down to 98 cents, I'm probably going to buy the Swiss again. Just letting you guys know. Because the Swiss pair is the only dollar pair that I'm trading. Well, that's not true. I am trading the yen like this too. I trade the Swissy more for the Swiss, and I trade the yen more for the yen. So in other words, the dollar is really not in my equation. It is, but it's not. I'd rather be long the dollar Swiss because I'm short Swiss francs, not because I'm long dollars. I'd rather be short the dollar yen because I'm long yen, not short dollars. Does that make sense? So the Swissy, you guys know we've broken out so many major downsloping trend lines. The retests here are all very important. That's why any move back down towards 98 cents, and I'm a buyer. Even if we dip even further down to 97 cents, I'm still a buyer down there. But obviously we've had a big reaction from the 618 this week. I already exited. I exited like at 99.18 yesterday, my longs, okay? So I was long, got out yesterday, right around here. I mean, within a couple of pips from where we're currently at. Any dip back down to 98 cents, and I'm probably going to get long again. So support 0.9800 key. I would assume that today resistance is parity, if not a little higher, 1.00330. 1.0030. And like I said, I still will buy that one on dips. If we dip today, like I might even be watching the dollar Swiss closer than I'm watching the euro dollar today, because I really want to be watching. Daryl says Swiss inflation is going up, something to keep in mind, especially if Chris is right and oil somehow rallies. Yeah, I don't think oil is going to rally. But that's my opinion. That's where Chris Baer and I differ on opinions. Dollar yen. But thanks, Daryl, for your input, as always. So here's the dollar yen. I am short the dollar yen right now. I will be exiting it soon. Matter of fact, I might take it off the table here momentarily. I will not be trading the dollar yen going into the FOMC. I will tell you that 120.20 is major support. If we break this support, not only is the dollar getting killed, but the stock market is probably under tremendous pressure. Okay, so I'm going to write down 120.20, 120.20, major support. Everybody knows that is major support. That's why I put those asterisks there. Resistance, we rejected at 122, but further resistance is going to be at 122.20. You guys know this has been a great place to trade it from the short side. It was our long support for, a month and a half. We finally broke last week or a week and a half ago, and then we've been trading against that. I shorted it there. We've been doing it a lot. So 122.20, major resistance. And can we spike beyond those today? Yes, because it is FOMC day. But I think those numbers are very well defined right now in the dollar yen. Let's go to the Canadian really quick, and then I'm going to put you on break. So I sent this out yesterday. I want you guys to read this really fast. Crude oil rallies over 10% from lows. Dollar Canadian, question mark. The risk at this point for the dollar Canadian is that the crude bounce has failed. Listen, read this carefully. This is yesterday afternoon at 1:47 p.m. The risk at this point for the US dollar Canadian is that the crude bounce has failed to produce much pullback in the US dollar Canadian. In my opinion, the risk is that if crude comes back down from here, 37.45, which we're trading right now at 36.91, back to $36 or so, the dollar Canadian could lunge to new highs. The 161% extension is at 138.30, and I still think it needs to be hit in this move higher. Current price at 137.23. Now, we currently trade at 137.60. Again, I will reiterate what I did yesterday. This Canadian is not backing off despite the crude oil bounce. If anybody is shorting the Canadian dollar right now, they're probably thinking, what the fudge sickles is happening here? Why in God's name is the Canadian dollar at its highs, at its trend highs right now, and crude oil has bounced 10%? With crude oil bouncing 10%, the Canadian should be at 136.50. Hell, it should be at 135. Why is it up at new trend highs? If crude oil pulls back, we're going to tag this 161% extension, and that comes in at 138.30. If you guys don't know why that number is so significant, if you go to the daily chart, that minor pullback, that very minor pullback, that's 161% extension. Remember, we're in a large flag pattern and still points to 142. I have a very difficult time. I shorted the Canadian because we saw that bottom in crude. I shorted the Canadian twice on Monday and made really good money. But I can't stay short the dollar Canadian when I see a big move like that. And what's even worse is the divergence. It's like the divergence is so glaring right now. The divergence between the dollar Canadian and oil. The dollar Canadian is like it's got its middle finger pointed at crude oil and saying, screw you, I don't care if you're going up. I'm going up too. Dan said people have been trying to pick the top in the dollar Canadian for months. Welcome to the pain trade. Right. That's exactly it. All right, now if the dollar does come off though, this is support. Now there's a lot of people that have been shorting the dollar Canadian. They're just like, what the hell? Yeah, we dip. 136.25 is going to be support. Support. And I hate to put it to you this way, but sucker's still bullish. All right, I'm going to go get some more coffee. I'm thirsty. I want coffee. I'll be back in it's 6 o'clock in the morning here, guys. And yes, I've been up since 3:30. Don't go anywhere. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. And Vikram says, good morning, Blake. Hope you're feeling better. Thank you. It seems like every day I'm feeling a little bit better. Thank you very much. I'm fortunate. I don't want to say this too early. You know, my wife had pneumonia. My oldest son had pneumonia. My youngest son got sick after Disneyland. It just kind of passed down the line, and so I think it hit me too. It just, the last of the Mohicans to get hit with illness, and I get to blame it all on Disneyland. It's Disneyland. It's all from Disneyland from 2 months ago. Mid-October, Disneyland, and it's made its way. The sickness has made its way through my entire family in 2 months. Daryl said, "Sue Disney." I'm telling you, I'm never buying a Mickey Mouse hat ever again, ever. Oh, did I buy one? Oh, maybe. All right, let's go to the Kiwi. So the Kiwi dollar has been pretty strong. I mean, I have to admit the Kiwi dollar has been extremely resilient in this, over the last several days. The dairy auction results yesterday came in a little weaker than expected. It hasn't mattered if the stock market's going up or down. The Kiwi's actually held up very well. Now, the Kiwi is faced with some pretty key resistance, in my opinion. We have this major trend line that didn't transfer through correctly, so let's do it a different way. This major trend line that comes into play, okay? That's going to come into play right around these highs. So here we can do it like this, okay? It's going to come in right around the highs that come in at 69 cents. So let me just tell you this. If we break above 69 cents, the Kiwi dollar is going to get extremely bullish. It is. I mean, it's already been grinding higher. We have like this inverted head and shoulder pattern that will really start to play out. You know, you got a shoulder here, shoulder, head. You know, that'll start to play out. Now, don't get ahead of schedule here. That ain't necessarily the play. dollar strengthens, okay, we break below this trend line here that's held us up, we're going to have some problems. So that comes in around, this is a 4-hour chart, so I'm going to say around 66.75, roughly. I would assume that's about 127% extension of that. That comes in at 66.50, but 66.75, I should just write 67 cents. Actually, it's 66, what is that? 66.85. Okay. So 66.85, significant support. Resistance is 0.6900. That is only 200 pips, guys. It looks a lot bigger than it is, but it is a 200 pip range. I mean, you got 69 cents major resistance. So even if we hit new highs here, new trend highs, don't get too super excited about it. Just remember there's a lot of horizontal resistance coming into play through here. All right, let's go over to the Aussie. The Aussie dollar. Personally, I think the Aussie dollar is in this here. Let's go way out. Okay, I think we're consolidating in this big triangle type of pattern here. Let me remove that. And I'm going to remove, I think I'm going to remove this. Okay. I actually think we're in this consolidative pattern that looks like this. All right. I believe. All right, which means that, you know, obviously support is down here at 70, I don't know, 70, 75 or so. Let's figure that out. 70.95. So let's just say 71 cents. Okay. Resistance 73.50 roughly. Because you see, we're right in the middle. Again, this pre-FOMC, guys. I mean, it's just, you know, what we do is we find ourselves mid-range. Because I don't think anybody knows what the hell is going to happen. You know, so I expect volatility, but you know, we're going to end up being mid-range with a lot of these. All right, let's go over to the dollar index. So here's the dollar index. It's a daily. Let's go over to a 4-hour. So if actually 3-hour, what am I doing on a 3-hour chart? Let's go back over to the daily chart. Okay, so the low to high here, that was a 50% retracement, if you guys don't remember. Low to high, 50% retracement. That's very important support today. 97.10 roughly. And then resistance, I think is going to be that spike high up here. You know, we have previous support, spike high up here. So that's going to be at 98.80, whatever. What's the high there? 98.90? Yeah, 98.90. So 98.90. We're in a range. Okay. Let's go take a look at the peso. Oops. Okay, so here's the peso. Now, the peso here, let's yesterday I was thinking, oh, you know, it might be a little flag, but we are also looking at this possible false breakout here. It's a lot, it looks a lot like the euro dollar, doesn't it? You know, like this. Okay. Really, really critical support, but is so far away in the peso. really critical supports is 1650. You know, as long as we stay above this yellow trend line, it's really hard for me to be bearish. Yes, I'm not, you know, denying the fact that we've had some false breakouts to the upside. But you know, this is the FOMC. You know, things can obviously change here, so dramatically following today. So support probably right here, 1693. Resistance 17, basically 50. For you guys that trade the peso, 16.93 and 17.48, 17.50 really, but this is still bullish. I know it. You're like, well, it's a false breakout, Blake, but yeah, you're going to tell me that that's a downtrend? You know, it's a really strong uptrend. There are still buyers on dips, obviously. Norwegian krona, it's the same as the Canadian. I mean, and I know we talked about it yesterday. I'm 100% sure we talked about it yesterday. Crude oil has failed the bounce, 10% bounce has failed to pull back the Norwegian krona. So what happens when crude pulls back from after a 10% rally? US dollar Norwegian krona heads towards highs. The Norges central bank meets tomorrow morning. So before you get too directional with the US dollar Norwegian krona, just again, the Norges central bank meets tomorrow, Thursday morning, right? Yes. Keep that in mind. I don't know if there's if you have much edge here. If the dollar rallies, you just have to imagine that if the dollar like puts in a major rally today, this thing's going to new highs. I mean, there's not a lot stopping it. And when you look at it longer term, you know, you look at it, this is a weekly chart, you know, you look at it longer term, you know, we're beyond 161% extension here. I mean, it's in major breakout territory. It has been. It's just been very frustrating. U.S. dollar Swedish krona. Again, we'll do the 840 to 860, and we're smack dab in the middle. Imagine that. This is one of those that it's going to break soon. And when it breaks, you know, you probably want to be keeping an eye on it. It's a near-term range, but you know, still a very, very bullish, you know, chart. Just we're mid-range at the moment. Okay, here's your bias chart ahead of the FOMC. It's done.